Ethan is head of Americas and policy at Bloomberg New Energy Finance, I imagine well known to all of you. Ethan, along with all of his colleagues, is analyzing cutting-edge work on clean energy market trends and developments, and he will provide us with a snapshot of their latest. So Ethan, over to you.
Hi, everybody, and thanks for letting me sit down so that I don't have to crane my neck and look back at the slides. I'm of course, honored to be sitting in Patricia Espinosa's seat today. It's great. I may never get this chance again, so thanks so much. I'm going to move relatively quickly. I'm going to try and explain the entire world of clean energy in about 15 minutes tops, especially since I know we're running a little bit behind time. Before I start, just a quick thanks to Mindy and to Kathy and to Chris and to Sue and all our friends at Ceres for holding this great event, bringing together so many terrific investors, and for all the hard work that they've done in this area over the years. So I'm going to cover a couple themes here, which I think are prevalent that we've seen in the roughly 13 years that new energy finance has been around. And then more specifically that we've seen in the last several years. One, I want to talk about the $1/3 of $1 trillion market that we're seeing in this industry. Two, I want to talk about some of the maturing that we've seen around financing. Three, I want to talk about how consumers are increasingly empowered in the energy evolution that we're seeing. Fourth, I'm going to talk about how batteries are getting even sexier than they were. I know this is a very sophisticated crowd, so you all know that batteries have always been sexy, but they're even more sexy now. I'm going to talk a little bit about those who lack access to energy and some of the really exciting stuff that we're seeing as far as clean energy is concerned. And then I'm going to talk about one final point about how there's a certain inevitability now about the technologies around clean energy. And I think that's important to contextualize within the current conversations that we're hearing in Washington and elsewhere. But first, the numbers real quick. So we saw last year about $1/3 of $1 trillion invested in clean energy globally. Important always to set terms here, which is a pretty narrow one, which is really renewables plus what we would call energy smart technologies, which are things like smart meters and other things to enable efficiency, and it's electric vehicles. It is not nuclear, it's not large hydro, it is not natural gas. It's a pretty narrow definition, and by that number, we're clicking along at around the 300 billion mark each year, year in and out, over the last 5 or 6 years. Cumulatively, we've seen over $3 trillion invested in this sector to date. So this is real, substantial investment. I've made this point, frankly, maybe at this conference, I'll make it again, which is there's really nothing alternative about clean energy anymore. It is a misnomer, and if you have that in your job title, you might want to change it. This is very much the mainstream. When the majority of the new build that we're seeing is zero carbon energy, it's nothing alternative about it, and it will not be from this point onward. In terms of where the money has gone, I think one of the really interesting stories is that we've seen so much of the center of gravity shift to the Asia-Pacific region. And I'll talk a little bit more about China in just a second, but the red bars that you see behind me represent the APAC region overall. And it's important to note it's not just China. It is also places like Singapore, Thailand, Vietnam, other places in Southeast Asia, and Australia, of course, as well. This is where so much of the activity and the action is happening. About half of all the dollars globally have been going into the APAC region. In terms of the technology, solar has really come very much to the fore, represents about half the capital invested that we're seeing each year. That's the yellow bar behind me, with blue being solar and then the other technologies following. So I said dollar amount more or less level over the last several years, but the good news is that we're getting a lot more bang for the buck when it comes to clean energy these days. The costs have been dropping. This is just one example. This is residential photovoltaics, and you can see the bottom red line is the cost of an actual module, a Chinese-made module, and the other lines are the installed costs in different countries of solar. And you can see how dramatically those costs have come down over the last 5 years or so. And then when you look at the amount of solar build that we've seen, last year we saw a record of about 97 gigawatts of total build around the world for solar. I think the incredible part of this chart on the right, as you look at it, is the red, which is China. China installed about 53 gigawatts of solar capacity last year. It's just unprecedented volume of new capacity. That's about 4 times more than the U.S. has ever installed in a year overall. It is it frankly caught us flat-footed. It was 20 gigawatts more than I think many people were expecting. And it's a testament to just how rapidly they are trying to add PV to their system. There are issues with this, to be clear. Whether or not all of it is dispatching, whether it's all generating power is another question, but the build is on. And once it's built, in theory, it would all eventually generate. So I just quickly want to touch for just a moment about financing. I've, in the past, and I think we at BNEF have characterized the financing of clean energy. Obviously, it's impressive in terms of the volumes, but the way in which a lot of the financings take place are still relatively rudimentary. That is, there's roughly $200 billion a year of stuff that gets built, projects, large and small, residential, et cetera. Typically, the way those have gotten financed has been a couple banks get together, maybe a tax equity investor here in the US, but with some degree, it's a relatively simple syndicate of investors or lenders. What the sort of grown-up energy industry does is it takes giant chunks of money and raises it over bonds. And so what's exciting to see is the rise in activity that we've seen around green bonds that have been focused on clean energy, and I would of course note beyond clean energy, other forms of sustainable efforts. But last year, we tracked about a 67% jump in green bond activity to about $163 billion worldwide. We'll put out more comprehensive figures on this next month, but the rise has really been impressive. And the way in which the money is coming in really varies. At the top bar, you can see asset-backed securities. These are portfolios of solar projects and other types of projects that get wrapped up together to get financed much the same way any different other types of things get financed over the capital markets, like car loans or insurance policies, other things like that. In terms of where the activity is happening, you can see it's been pretty diverse, with Europe, Americas, and APAC all having some substantial share. Consumers are being empowered. What do I mean by that? One of the main things that I think is exciting about this sort of energy evolution, as we've seen it, is that consumers have more choice now than ever to decide how they consume energy, how they monitor energy. If you think back 20, 30 years ago, you wanted to buy a car, you could buy a car with a gasoline engine in it, maybe with a diesel engine in it. Now you can buy a hybrid car, you can buy a fully electric car, you could even buy a fuel cell car. You have all those different choices. If you want to go and fill it up at the tank, you might put ethanol in it, you might put hydrogen in it, you might put gasoline, you might put diesel in it. If you're a consumer at home, you can buy the utilities power from wherever it came from, or you can opt specifically to buy clean energy through your utility, or you can put a PV system on your roof. You can monitor how you use that energy in a much more close manner with a smart thermostat and other technologies. Consumers fundamentally are being empowered to make smarter decisions about how they use energy. And particularly in markets where energy is expensive, they're taking advantage of that. Now, I want to talk about one other type of consumer, which are corporate consumers. So we don't always think of big companies as big consumers of electricity, but they are, obviously. More and more, we're starting to see a trend towards what we're calling clean PPAs. That's power purchase agreements signed by large corporations to provide the power that they need from green sources. So last year, we tracked about 5.5 gigawatts of PPAs signed from large corporates around the world, specifically buying clean energy to service their operations. In terms of who the companies were, you can see the number of the tech companies have been very involved in this for a number of years, but I think it's worth noting that you see some other players like Alcoa, Kimberly-Clark, GM, big Fortune 500 companies that are specifically sourcing energy from clean sources. And as has been mentioned earlier, there are many more companies that have made similar pledges to buy a lot more clean energy going forward. So I think it's impressive to see corporate America, I should say the global corporates, taking more of a lead in terms of proactively choosing to buy zero carbon energy. Now, as I mentioned, batteries are getting sexier than they ever were, and one of the critical components of batteries is that they help to deal with the so-called variability issue. Stating the obvious, if it's not windy, you don't have wind power. If it's not sunny, you don't get much solar power. So what do you do in those intermittent periods? You need batteries, and batteries can balance the load on a very short-term basis, on a minute basis, and on a years to month ahead basis. The good news about batteries is that the price has been coming down very dramatically. One of the things that we do is track contracts for lithium-ion battery packs. We've seen the price come from about $1,000 per kilowatt hour to about $200 per kilowatt hour now. Those are the little triangles that you see coming down. Now, the more you see costs come down, the more you see usage go up. And on the right-hand side, we tracked our forecast for electric vehicle demand. I know there's a panel later, I'll talk a little bit more about this. But obviously, you can reach economies of scale, and you can see EV adoption really pick up. Already, we've seen about 1 million sold last year. We're going to see a lot more going forward. So it becomes a virtuous cycle. As you reach more scale on EVs, you see more of a decline on battery costs. One last thing I'd point out before moving off this slide is that that very top little sliver you see of purple, that's what we forecast to be the demand of batteries that sit on the grid in some kind of way. And those obviously are really important as far as interfacing with renewables. But those actually kind of ride along with electric vehicles. The real demand market for batteries is going to be EVs, and that's where we think things are going. Very quickly, the next billion may not need a grid or even want one. There are a number of really interesting companies out there that have been raising venture capital over the last several years to bring energy access to the 1.3 or 1.6 billion people out there that still lack it. And the reality of it is that in many of these countries, there won't actually necessarily be the need to build a hub and spoke grid. Right now, the lowest cost way to bring energy access to millions of people around the world is through solar, not by extending the grid. Now, it's basic access, to be clear. It's enough perhaps to charge a phone and run a fan and do a few other things. But for that first step, there's really no reason in many places that you need to build the grid out. This is just a quick look at our glance at the costs, particularly in countries where you have either high existing electricity prices or high diesel prices. Already, solar makes more sense. And that's really the yellow zone that you see on this chart. And finally, I'm going to finish off with one quick point about status quo equaling change. And I think I try and make one basic point, which is that I think one of the most dangerous assumptions you can make about energy today is that the world we have today is the world that we're going to have 10 or 20 years from now. That actually is a really risky assumption, because frankly, if you'd made that assumption 10 years ago, you'd have gotten things really wrong in the United States, as one example. About half our power came from coal 10 years ago. Last year it was down to about 30%. About 8% of our generation came from renewables, including large hydro 10 years ago. That's doubled to about 16%. Things can change really fast, and they have. On the right-hand side, you can just see the same split by the total amount of terawatt hours that we've consumed. And one thing I would note is that the total, the very top of that bar, ignore all the splits, but the top of that bar has actually gone down. So, we actually aren't increasing our demand for electricity in the United States, even though the economy has been growing, not spectacularly, but growing over the last 10 years. I guess one last point, I'll editorials for 1 second, which is that I did catch a good portion of the president's speech last night, and he mentioned that the war on, as he put it, beautiful, clean coal has ended. That may or may not be the case, and I think we'll find out. I'm not sure there ever really was a war, but the fact of the matter is that this year, another 13 gigawatts of coal is scheduled to come offline in the United States. That's already been announced to the EIA. So the decline in coal generation in the United States is inevitable. It's inexorable. It's going to happen. The policy levers are really fairly limited in terms of what any one administration can actually do on this. The economics are really undeniable on coal. I'm going to skip this one in the interest of time, and I'm just going to, and this one too, and make one final point. So I think what I've painted for all of you is a relatively optimistic perspective about the decline in costs that we've seen for renewables, the rate of adoption that we think we're going to see going forward, and we're very positive about that, the level of electric vehicle demand that will be going forward. But I think it's always worth sort of contextualizing this. So we have a forecast, which I've sort of mentioned several times, which is that we think we'll see roughly a continuing of the pace that we've seen of clean energy build going forward. That's that purple line on the left-hand side. That's just saying what would happen to CO2 emissions if we keep going on the path that we're on, which basically says, look, they won't rise much more from the power sector. Now, the bad news is that if you want to get to a 2-degree scenario, you need to really bring that line down. So even with the $3 trillion that we've seen cumulative to date, even with the $333 billion last year, even with a record amount of solar in China and elsewhere, there's just not enough actually happening right now, and more will need to be done. And while we, as a research firm, an economic research firm, are big believers in economics, we don't think that you get from that top line to that bottom line purely by economics. You will need more policy drivers going forward. And just the last comment, and this is some work that we originally did with Ceres several years ago, was to look at what the so-called gap would be for clean energy if you wanted to try and actually bridge those two lines. As I said, we're optimistic. We see about $9 trillion of investment coming over the next 25 years in clean energy. But we think you need about 14 trillion, and that's about a $5 trillion gap. And so while there's been incredible progress made, there's a long way to go. And so with that, I'll wrap it up and say thank you very much.